Well, it's great to be here, and I hope that this is a fruitful conversation. I saw Alan Greenspan and one of the CEOs of a major corporation do this one, so I hope we can do as well as
That's
the
great,
old
absolutely.
masters. I think I'd start with a question, and having taught econ for a long time, everybody hears in the news about the Fed all the time, practically every day now. Just something of this about the Fed, something of that about the Fed. But a lot of people, we really don't understand much about the Fed. So could you just tell us, what is the Fed, what does it do, and what's the Federal Reserve Bank of Minneapolis?
Sure. Thank you, Ed, for the question, and thanks for having us. It's great to be here. And by the way, I look forward to hearing directly from you as well. So we're going to do Q&A with the audience as well toward the end of this. So ask me your toughest questions. But I do like to start by talking about what the Fed is. Alexander Hamilton created the first central bank in the United States, but it lasted about 20 years. And the reason it lasted about 20 years is, as a country, we've always hated the idea of having a central bank because it sounds mysterious. A bunch of bankers and political types in a back room doing God knows what. We just didn't like that. And so it lasted about 20 years, and then they got rid of it. But then in the 1800s, our country kept getting whacked with financial crises. And finally, Congress said, wait, something's wrong. Why do we keep having these financial crises? We need a stabilizing element. So they looked around the world, and other countries had a central bank to try to deal with financial crises. So in 1913, Congress said, finally, we need to have a central bank, but we still hate the idea of having all this power concentrated in one place, in one body. So they did something different than all these other countries. They created a distributed central bank with a board of governors in Washington, D.C. That's Janet Yellen, you've heard of her, the Federal Reserve Chair, appointed by the President of the United States, and then 12 regional Federal Reserve banks, including the Federal Reserve Bank of Minneapolis, where the president, who's me currently, is appointed by a local board of directors, and my job and our jobs are to represent our region. So we do have a central bank, that's the Federal Reserve. We're the lender of last resort if there's a financial crisis. But importantly, the power is distributed around the country, so it's not all concentrated in one place in Washington, D.C. So our region here is Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and part of Wisconsin. And what we do is we regulate banks in the region. We provide financial services to banks. So if you get cash out of the ATM, that cash originated at the Federal Reserve. We have Brinks trucks coming to and from our vault all day. We do community development work. We do economic research. And we help set monetary policy at the national level. But part of our jobs are to represent the region in those discussions. So I go back to Washington, D.C. 8 times a year to set interest rates for the country, and part of my job is to represent this region in those discussions.
You mentioned the difficulties, the periodic financial panics and payment system banking problems that they had throughout the 1800s that led to the compromise, the Federal Reserve Act of 1913. And from the point of view of the theme here today is economic development and community development, and we're looking at cities like Dubuque, and I suppose if you go up and down the river, La Crosse and Quincy, Illinois, and places like that. The people out here in the Midwest, sort of the compromise in 1913 was they feared Wall Street, but they didn't want all their credit to dry up unexpectedly whenever something happened in New York. And they didn't want to see their bank go broke and lose their nest eggs, their savings. And so, that led to the compromise. Is that problem of availability of credit for communities like we're talking about today and for small businesses but other enterprises, nonprofits, hospitals and so forth are increasingly large elements of the economies of some of these cities. Did we solve the problem, or is it sort of an ongoing challenge that we have to deal with?
I think it's an ongoing challenge, and in some ways the problems are getting better, in some ways the problems are getting worse. So if you look, we had the terrible financial crisis in 2008. A lot of regulations were passed after that to try to prevent that type of a crisis from happening again. But it had a perverse effect. It in some ways made the system stronger and safer, but it also made the advantages that the biggest banks have bigger. So this too big to fail problem in some ways got worse Because, for example, we have all these rules that we're layering on community banks and big banks. Well, it's much easier for a big bank to hire another compliance officer to deal with these rules than it is for a little tiny community bank to hire one more compliance officer, because the economies of scale are there. And so now all of a sudden we're seeing a lot of small banks are either going out of business or they're selling themselves to the bigger banks just because they can't afford to compete anymore. And it's very hard for the biggest institutions to serve the local communities the way those local communities need to be served, especially in rural areas or perhaps in inner city areas. So this is an ongoing challenge. We have a community development and community outreach groups within the Federal Reserve to try to understand what's happening in these communities, understand what the challenges are, make sure that banks are treating all of their customers fairly. But it's an ongoing challenge, and I got to tell you, we haven't solved it yet.
Okay. I was a regional economist at the Minneapolis Fed in the 1990s, and we were going through, or the banking supervision people principally were going through a rewrite of the rules to implement the Community Reinvestment Act at that time. And I just, I was asked about a couple of issues on that. But sort of, what possibility is there just within the rewriting or differences in the application of existing regulation to correct some of the bias toward big banks? Are there ways that you can help the banks in towns like Worthington or Rochester or Dickinson, North Dakota or whatever without action by Congress?
It's tough because everybody, I think it's bipartisan, Republicans and Democrats, want to address the issue of too big to fail. So the biggest dozen or so banks in the country that really put the country at risk in 2008. So but at the same time, Republicans and Democrats, by my reading, also agree we want to relax some of the regulations smothering community banks. But they're nervous that if they relax regulations on small banks, they might accidentally relax regulations on the big banks at the same time. So last year at the Minneapolis Fed, we spent a whole year studying the too big to fail issue, and we came out with the draft proposal of really increasing the capital requirements for the biggest banks. This is the buffer that banks have against losses in case they make a mistake. If we do that, I think people will have confidence that we've addressed the too big to fail issue, and then we can relax the regulations that are smothering community banks. I think people are nervous that if we just do the relaxation part first, we may never get to the part where we really address the big bank risk, which still exists today.
Mm-hmm. The U.S. banking system is really interesting. Decades ago, I taught at a small college where we had quite a few Canadian students. And at that time, the U.S. still had about 14,000 separately chartered banks, and Canada had 14. And now we're down to 7,200 or something, and Canada, I believe, is down to 7 or 8. But, we have this complex. We have state charters and national charters and so forth. Some parts of the banking system really are struggling, but yet there are examples, or many banks, community banks, independent banks, that are really doing quite well. And my perception is that they're often more responsive in terms of community and local economic development issues than the bigger banks are. What's your sense of that, and why is it that some of the smaller regional independent banks seem to be doing better than others?
Yeah, no, I think that's exactly right. I think it's very hard in rural communities in particular. How do you appraise a property if there's not a bunch of transactions that are similar to it that make it easy for someone to say, oh, this house just sold, this one's like that, the value must be similar. So it requires the local bankers who know the market, who know the community, and by the way, who know the borrowers, who had those long-time relationships with the borrowers to make a judgment about, is this person a good credit risk or not? Very hard for big banks to do that. And so I do think the small community banks have a very, very important role to play. But it's different. Banks, yesterday we had our board meeting. We have a board of directors at the Minneapolis Fed from all around our district. And every time we get together, 8 times a year, they give us feedback from their contacts in their region about what's happening in the local community. One of the local bankers on our board says, remember, a bank reflects the local economy. So if the local economy is doing well, small businesses are earning profits, people have good jobs, they're making money, they're buying cars, they're buying houses. The bank is then doing well. So it's no surprise that banks in communities where the local economy is doing well, those banks are going to do well. But if the local economy is doing poorly because ag prices are low, or oil prices are low, or mining and iron ore prices are low, guess what? The local bank is probably going to be suffering too.
That your mention of the monthly board of directors meeting for district banks sort of leads to a topic that I used to be involved in terms of sort of measuring what's going on in the economy of the district. Besides the monthly board meeting, when you talk to people like this bank or other people on the board, how does a district bank like Minneapolis get information about what's going on in, Malta, Montana, or Bismarck or Dickinson or Houghton, Michigan, or something like that? I mean, what are the sources of information, particularly about, small businesses or businesses that aren't, corporations that are analyzed by analysts all over?
I'd say a few different ways. One way we get data is through actual data collection, formal statistics that are either put out by states or at the national level, and we comb through that data whenever it comes out. We also have a community outreach department, regional outreach department, that goes out and drives around the whole district, meeting with small communities, community leaders, nonprofits, small businesses, et cetera. And then third, I travel around the district quite a bit. Part of my job, again, is to get out around the district. By the way, that's why I'm here today. I'm not just here today to deliver a message to you. I'm here today to hear from you. So when we get to the Q&A part, I'm really looking forward to you not just asking me questions, but telling me, what are you seeing in your communities? What are the challenges? This helps shape and inform my thinking about the local economy. And then we put all of that together to form our overall views of the local economy and the national economy.
Could you say just a little bit about the local board? Because where I'm getting to here is there are the Class C directors.
Sure.
And they are, they provide some input. And when I was sitting in the corner taking notes at meetings 25 years ago, we had the president of a college in Helen, I believe, for a while was on the board. There was a woman from Bozeman who ran a regional housing agency and so forth. But, could we have economic development people here in the room be candidates for being a director of the Minneapolis Fed?
Absolutely. So our board of directors, by law, we have 9 directors, 3 of whom are local bankers elected by the local banks. So we have a local banker from the Twin Cities, we have a local banker from North Dakota, we have a local banker from Wisconsin. Then we have 3 what are called Class B directors that are picked by or recommended by the bankers, but who are non-bankers and not allowed to be bankers. So, for example, the newest director we have on our board is the dean of the Carlson School of Management at the University of Minnesota, Sri Zahir. She's a brilliant woman, PhD in economics from MIT, and has been an academic all of her career. Terrific addition to the board. Born and raised in India, but then trained and lived here in the U.S. Our chair of our board is Mai Kao Hong from the Wilder Foundation, who many of you may know here in St. Paul. Mai Kao is a great leader, brings a nonprofit perspective to everything that we do. We have Ken Powell, the chairman and CEO of General Mills, and we have Harry Melander, also from St. Paul, who's a union leader, a labor leader. So on our board, we have big business, we have small business, we have community banks, we have nonprofit leaders, we have academic leaders, all helping us get a sense of what's happening in our community in all aspects of our community. And so it's incredibly valuable to have that diversity of perspectives literally giving us, when we go around the room, we say, what's happening in your region? What's happening in your context? More often than not, Mai Kao is talking about what's happening in the nonprofit communities and in the communities that they serve. Ken Powell is able to talk about what's happening at the business level in the Fortune 100. And it's great to have that diversity of perspectives at the same time.
What about do you still have the advisory council on small business, labor, and agriculture?
We have various advisory councils where we get input from people, but even beyond just the advisory councils, we bring in groups all the time of people from the financial sector, people from the nonprofit sector. Again, the questions that I'm always asking them is, what are you seeing on the ground? Here's the thing. If you turn on CNBC, or Bloomberg TV, you will see economic data coming out every day. There's tons of economic data coming out every day. But a lot of times the data is telling different stories. So how do we make sense of this data that's pointing in different directions? Part of the way we make sense of that are the conversations we're having with people on the ground. What are you seeing? What's happening? Are people buying more cars? Is it hard to find workers? We hear that a lot. When we travel around the district, it's hard to find skilled workers to take those jobs that are available. But then it starts getting into issues of training. We have job openings that are available requiring skilled workers, and then we have people who are looking for jobs but don't have the skills, and there ends up being a mismatch. And so these conversations that we're having are enormously important to making sense of the myriad data that we get every day.
I'm sort of getting it. I'm on Medicare, so I'm getting into geezerhood here, and I have these moments of, well, back in my day. But what strikes me, I spent 7 years at the Minneapolis Fed, and what strikes me is how dynamic the region is and how much things change. I left in '99. And going back further, I was a young lieutenant commanding an Army Reserve unit in Worthington, Minnesota. That'd be almost on the Iowa, on Interstate 90, almost in South Dakota. And in 1977, that was this, regional city of maybe 6,000 people. But I remember getting this document from, the Army Reserve headquarters somewhere saying our recruiting goals were I was supposed to have 44/100ths of an African American and 0.37 Hispanics. And now I think in the Worthington Public Schools they have 42 different languages. And it's, it's one of the most diverse. Now it's a packing plant town, which explains some of that. And in the town I went to high school, they published the bus routes that's a town of 1,300. They published the bus routes in the local weekly newspaper. And just going by Hispanic surnames, the buses, 38% of the students had Hispanic surnames. Now that high school is not that heavy because that's the rural kids. And the Hispanic people in that area tend to be living on farm acreages. That's the cheap housing. And so in the village of Edgerton itself, there aren't that many. But that's so different from what it was even 20 years ago. When I was at the Minneapolis Fed, one of the outreach things was educating bankers about lending on Indian reservations because the legal things,
Sure.
the sovereign nations and so forth. But that was sort of the big, in terms of sort of issues with minorities and access to credit and so on. How are these communities in places like Worthington or whatever, they're so diverse and they have very different payment systems needs, they have very different credit needs. How are we keeping up with that, and what is the Fed doing in terms of that?
Well, there's no question the region is changing dramatically. One of the people ask me a lot, what has surprised me? So, by the way, I'm not from Minnesota. I was born and raised in Ohio, lived in California most of my adult life, spent some time in Washington, D.C., and then moved here in January of 2016 when I joined the Fed. People have asked me what surprised me. Now, we have a lot of strengths going for us. We have a very diverse economy in terms of different industries that are represented here. Overall, we have a pretty highly educated population. Overall, on average, our schools are quite good compared to national averages, as an example. But the biggest surprise that I've found as I've gotten to know the region are the negative surprise, are the extent of the racial and economic disparities that we have in the region. We have some of the worst in the country. Mm-hmm. And so I started asking questions, why is that? For all that we have going for us as a region and as a state, why do we have some of the worst disparities in the country? And the honest answer is, I didn't find very good answers. I started asking, we have a team of great economists in our bank at the Fed. I started asking economists around the Federal Reserve System nationally about the sources of economic disparity. And I'll give you a simple statistic. This isn't unique to Minnesota. This is a national statistic. But on any given day, whether it's a booming economy or a recession, African American unemployment is always twice white unemployment in America. So if it's a booming economy and white unemployment is 4, African American unemployment is 8. Pretty good bet. If it's a recession and white unemployment is 8, African American unemployment is 16. And even if you take college graduate against college graduate, same ratio. Someone who didn't graduate high school against someone who didn't graduate high school, same ratio. So I started asking questions among the hundreds of economists that we have at the Fed. Why is that? And I was surprised that we don't have answers. And I realized if we don't have answers to the most basic questions, we're not going to have solutions. So we announced in January what we're calling the Opportunity and Inclusive Growth Institute, a major new research initiative at the Minneapolis Fed to dive into these issues of economic disparity, economic opportunity, and inclusive growth. It's about race, but it's not just about race. It's also about challenges in rural communities as well, and all the different sources of disparity. So we recruited literally the best academics in the world to partner with us. We have visiting scholars who are going to be coming to Minneapolis to work with us on these issues. These issues are decades or longer in the making. We're not going to come up with an answer overnight, but we feel like we have a role to play in at least doing the research to analyze these questions so that we can present other policymakers with objective assessments of what's working, what's not. Here's where you ought to be focusing your attention. So we're limited in what we can do, actually. We're limited in the tools we have. So we control interest rates. We control monetary policy for the country. So if the economy looks like it's overheating, we'll raise interest rates to slow it down. If the economy looks like it's slowing down, we'll cut interest rates to try to boost it. But that's one interest rate for the whole country. You can't target it at specific groups or specific individual people. So targeted interventions require Congress or the executive branch. But we feel like we do have a role to play in doing the analysis, presenting our findings in a non-political, nonpartisan way to inform other policymakers. And I'll give you one more example, which is when you were there at the Minneapolis Fed, our bank took a huge lead on analyzing the benefits of early childhood education. We knew we couldn't implement it, but we said if we can do the research and show our findings and put them forward, then maybe we can make a contribution. And I feel like the Minneapolis Fed has been making a large contribution in advocating for early childhood education, saying, hey, the best return on investment that we've seen is investing in young kids before they go to school, and here's the payback to society. That's the kind of analysis and role that I think we can play.
You've talked about the sort of the general role just now about the general role of a central bank in terms of maintaining a payment system and the stability of a currency and then a favorable interest rate environment, neither inflation nor deflation. But you do have some very specific community development oriented initiatives. Could you explain a little bit about the Community Affairs Department, if it's still called that, and their activities and their publications?
Sure. Well, we have Michael Grover here who leads the group for us. We work with our colleagues all around the country working with nonprofit communities, looking at what's working, what's not working, trying to catalyze people. Again, we don't give grants. We're not a grant-making body. That's up to Congress. But if we can convene people and say, hey, let's share the best practices. These programs seem to be working. Michael and I were talking yesterday about the debate of do you focus on people or do you focus on regions? And Michael was sharing with me, our position is focusing on people seems to be having absolutely the best effect. But we're learning that a lot of these problems are very complicated. Right? Education is a huge part of many problems that we're facing as society. There are housing-related issues. There are transportation-related issues. There are healthcare-related issues. So last week, I think it was last week, all my weeks blur together, I was in North Minneapolis visiting the Northside Achievement Zone, meeting with Sandra Samuels to see what work they're doing in bringing wraparound services to kids and to families. And so I think our group is out there in the community as much as possible to see what's working, see what the challenges are, and then see what roles financial institutions can play in making sure that credit is available to low-income families. One of the big challenges in a lot of areas of poverty, they don't have access to financial services, as you all know, or it's very hard, or it's very expensive, or they have to turn to payday lenders, or there's a lack of trust of how do you get people to sign up for accounts, et cetera. So trying to break down these barriers. We also have, you mentioned tribal communities. We also have a Center of Indian Country Development, which is focused on trying to bring financial services and economic development into Indian country. And you talked about the challenges of giving loans on reservations. We've made progress, but from what I understand, we haven't solved that yet, right? Different tribal nations have different rules. They have different ownership of land. So if you don't own your plot of land, how can a bank give you a mortgage? So we're working on trying to solve some of the legal issues associated with that. We've made progress, but we do have a long way to go.
Thinking about I'm a farm kid, so I unfortunately tend to gravitate sometimes too quickly back to rural areas rather than Dubuque or something which I think of as a fairly large city. But thinking about the increasing diversity of outstate areas and the needs for financial services that you just mentioned, and then going back 10 minutes or so, you mentioned talking about independent banks and their responsiveness and their knowing the people they were lending to and then, sort of the situation in the community. I've had an account at the State Bank of Chandler, Minnesota, population 276. And my family has had an account there since 1907, continuously. My grandfather, my mother, I, whatever. And it's the old lending on character, in part. I mean, there's also cash flow and collateral, but, my family's been there for 110 years. We've always repaid our loans. They are progressive people. They are open-minded people. But it's just a lot easier for me to walk into that bank and get a loan than someone who looks Hispanic or Somali. And, they're just going to get a different treatment than I get. And I can't remember being in that bank and seeing a customer at the counter who wasn't white and of Norwegian or Dutch descent. I've never seen it. Yet there's a meat processing plant in that town that employs 400 people. And of those 400, 300 of them probably are minority.
Sure.
And so how do you get around that? It's not, I don't think there's much intent to discriminate.
Sure.
But there really is a difference in access to credit and access to payment
Sure.
services.
Well, look, these are human problems that we've wrestled with for a long time. My parents came to America 50 plus years ago from India. I'm sure when they moved to Akron, Ohio, my dad came for grad school. I'm sure that it wasn't that different than the experience you're talking about. And so you'll find, and you see this better than I do, in areas where there are pockets of minorities or pockets of ethnic communities, local service providers pop up to try to meet their needs while the rest of the community gets used to the new people who are in town, right? I mean, there's no policy solution where I can just say, this is the answer, everybody's going to feel comfortable with everybody that's different than they are. That's just not how we're wired, unfortunately. It takes time. But I think, I'm an optimist. I think most people have good intentions in their heart, and most people, as they get to know one another, want to help each other. And so I think that these things, generally speaking, our country's done a really good job over time assimilating immigrants and welcome them. We are a nation of immigrants, and I think we will, all these communities will get comfortable. And, by the way, they don't really have a choice. Here's the thing. As I travel around the district, all around Montana, North and South Dakota, Minnesota, I hear a lot of concern in rural communities about populations declining. Oh, so you have a choice. You can either embrace immigrants or you can see your population decline. Up to you. And that's just math, right? I mean, people ask me about economic growth. Economic growth comes from a few factors. It comes from productivity growth and it comes from population growth. And the fact of the matter is, Western societies, including our own, are not having kids at the rate that we used to. So immigration has really been helping America for economic growth because we just haven't been having as many kids as historically our parents and grandparents did. So we can either accept slower growth, we could subsidize fertility, which is pretty expensive, right? Or you can embrace immigration. And those are the three choices, and that's literally math. And you can pick which one you like. I'm not here to tell you the right answer. You can pick for yourself. But that's the math. And so I think we'll figure it out.
Okay. I know by experience that in a meeting like this, we can which the theme is community development and economic development, and we can focus on that. But there are people sitting here who want to know what's going to happen at the next FOMC meeting, or how do you see the national economy? So maybe we could talk about that for a couple of minutes. And I have two things I'd like to ask about. One, it seems, especially since the financial crisis, that the news about the Fed is all very short term. Like 90% of the news is what's going to happen at the next FOMC meeting. We have like a 6-week out. It's sort of the longest we look at things. And is there any way we can get away from that and have the general public think more about monetary policy and so forth over a longer term?
Well, I agree with you, and I've spoken about this before, where I said I don't like all this attention on the next interest rate move, because the truth is the next interest rate move is not that important in the big picture of the trajectory of our country. What really matters much more is fiscal policy, things that can the Fed can do nothing about productivity growth. Right? The source of wealth over time for nations really comes from how innovative we are, how educated our workforce is. We have no ability to affect that. Yet we spend all this time focusing on interest rates, and the reason we do as a country is because there hasn't been much action in Washington on these other issues. So if we see progress in Washington between Congress and the executive branch on fiscal policies, whether it's regulatory reform or tax reform or education policy, those things are what are going to drive the long-term future success of our country. So we would love it if the Fed was not on the cover of the paper every day and was on the back page, because there's so much other stuff to talk about happening in Washington, D.C. That's ultimately what matters long-term for our country, not monetary policy. I mean, don't get me wrong. If we screw up monetary policy, it's painful, but the best we can do is create an environment where the economy is overall healthy and can grow. But then it's up to Congress and the executive branch and innovators and educators to use that environment and take it forward.
What about the interaction between, say, the Minnesota or the Mississippi River Valley economies, the national one, but then globally? We have all these things going on. Does China have this credit bubble, lending thing that's going to come to some sort of crisis? If Britain exits, what else is going to happen there? What's going to happen to the Euro system? And I think that I, myself, am often surprised by how when you get out of here, there are still, the economy of the district or of this area still is very integrated into the global economy. I mean, there's another little town near where I live is Pipestone, which is maybe 2,500 people, and has a small packing plant, very specialized. But they send a lot of stuff to China.
Sure.
So you talk about a border adjustment tax, or we're going to hit China with a 45. How do you see the world economic environment right now interacting with the Ninth Federal Reserve District?
Well, it's a huge factor. We export a lot of stuff all around the world, whether it's grains or it's ores, et cetera, as well as manufactured goods. We obviously import goods from around the world. And so this is a very interesting local economy because it's diverse and it's global and it's local all at the same time. So all of these factors are very, very important. And we don't know. Right after the election, the stock market started taking off and the bond market showed some sign of optimism of maybe deregulation and maybe tax reform would lead to stronger economic growth. But I've written about this before. I didn't change my own economic forecasts because in my judgment, markets are really bad at predicting political outcomes. Mm-hmm. They can predict some things well, but I don't think they can predict political outcomes well. They didn't predict Brexit, and they didn't predict the results of the presidential election. So I don't have much confidence that they can predict tax reform. And I think we're learning, if we looked at the first almost 100 days of the administration, even if you have one party in power in the White House and both houses of Congress, it's still tough, right? 200 years ago, the founding fathers, you mentioned Hamilton and Madison and the other, John or Matt, and anyway, all of them. I just finished a book on Ben Franklin, and so I had him on my mind. But in any case, they designed the system to be very hard to get legislation passed. That was part of the design of the Constitution. And so we're seeing that it's hard. And so who knows what tax reform is going to look like? Who knows what regulatory reform is going to look like? Who knows when it's going to come out? And so we can't predict. And so you're right, it is all going to affect our district, but it's too soon to predict, and that's why I haven't changed my economic forecast based on it.
Okay. a little bit of a zag here, but you're an aeronautical engineer, or mechanical, I'm sorry. My son is an aeronautical engineer. We're at a liberal arts college. Does Hamline have any kind of an engineering program? I didn't think so. I don't mean to say that dismissively. But what about, there's a lot of talk about STEM education and early childhood, but then getting people into things where they can do the technology and math and engineering. I guess, given your background as someone who has an engineering education, who worked in industry, but then got an MBA and then got into finance, what do you see in terms of, what are your perspectives on sort of this interface between productivity and business startups and sort of literacy in terms of science and math and engineering? What could we do better?
Well, I think we need to do a better job educating students. When students think about when you all made your decisions about where to go to school and what to study. I mean, I can tell you very little thinking went into it for me. I mean, I knew I was good at math and science, so I decided to go forward for engineering. But there wasn't much more thought than that. I didn't really look at the job market afterwards and say, hey, is this a good choice for me going into this field? Are people hiring? I hear all these anecdotes. Top Chef became a hit program, then all these kids went into culinary school, right? And then they got really frustrated when there were no good jobs coming out of culinary school. So I think we just need to do a much better job equipping students on the front end of their educations with the data so that they can make informed choices as education consumers. And then, because we want people who are spending a lot of money getting an education to be able to have a career where they can afford that. And so arming them with the data to make informed choices, I think, is important.
I think we're into the Q&A.
Perfect. Yeah, absolutely.
Okay. Questions from the floor?
We're live streaming this, so we want other people at home to be able to hear you.
Thanks. I'm Chris Norman-Major. I'm co-director of the public administration programs here. And I want to ask a little bit more about sort of the social policy aspect of the things you're doing. I worked with Ready for K, and I did a lot of work with Art Rolnick and Rob Grunwald and on the early child investment stuff. And part of the frustration of those of us who were advocates were it took the white PhD male economists coming out and talking about the return of investment on early childhood education to get the policymakers and the business community and those kinds of folks to listen to what advocates had been saying about the same thing for a long time. And so I'm wondering how I appreciate the fact that the Fed is and you are taking a role in trying to be a voice on these issues, and sort of how do you break it beyond so it's not just the communication between the Fed and other businesses, but you're bringing in the rest of the communities that are affected by these policies, and that this becomes a broader conversation about issues around institutional racism or other things that are causing the disparities in all sorts of things in Minnesota.
Sure. Well, great question, and we have many avenues that we're trying to do that. I mean, by the way, that's why I'm here today, to share with you what we're doing and to hear from you and hear your questions. And we're going to have different forums where we can bring people in. And we do this. We have town halls in the bank where we invite people from the public and from different sectors to come in and meet with us to share their perspective. That's why last week I was at NAS touring the Northside Achievement Zone, and my colleagues are doing that too. But I'll tell you this. I'm going to just share with you something, and this isn't a criticism. It's just an observation. I have visited a lot of nonprofits around California and around our district. And virtually everyone I meet with has a wonderful story to tell. It just like tugs on your heartstrings, the good work that's being done and the people that are being affected. But then when you step back and you look at the national data, where are the results? And so it's hard by anecdote to know what is scalable, what is really having an effect and what's not, and what is the best ROI. So I hear you, and I don't want it to be where, boy, it just has to be a bunch. And by the way, we have a pretty diverse economics group, so it's not just a bunch of white PhD economists, though we have those too. But I am sympathetic when policymakers and the business community says, we want objective analysis to tell us, Because a lot of people that I found in our country are willing to spend money to help their neighbors. They just want to have some confidence it's going to lead to better results. And so I do feel like there is a role for objective data and analysis to validate those wonderful efforts that are being made.
Good morning. Jeannie Fox, another co-director on the public side and director of the nonprofit management programs here. So my question is, thinking about the role the regional bank can play. You have access to all this expertise. You mentioned that hundreds of economists, data, research. You also mentioned the mismatch between the lack of skilled workers, and I'm thinking about a recent executive order that would even limit those HB1 visa skilled workers even more. So this is the do facts matter anymore question?
Well, I'm not going to weigh into specific administration policy, but I will say that one of our competitive advantages as a country has been we have been the best place for high-skilled immigrants around the world to come to. If they had a choice of coming here or coming to China or coming to Germany, no questions asked. They would all want to come here. My parents are examples of this, and I'm the beneficiary of the fact that my parents were able to come to this country. So I think high-skilled immigration is enormously important to American economic competitiveness, and I'll leave it at that.
Good morning. Thanks so much for joining us.
Thank you.
So I graduated from the public administration program here at Hamline, and I was in higher education for 15 years, and now I'm at county government. So I was intrigued by the intersection of nonprofit government and private sector. So I'm curious about the role that county governments and state governments, which is what I came out of, can intersect. So you did a good job, I think, with the federal and the community. But we all have economic arms in our counties and in our states and our colleges, our universities. So how can we marry those up with some of the things that you're working on?
It's a great point. And to be honest with you, I have not done enough with local and state government yet, but I need to do more. When I travel around the district, usually what ends up happening is we'll set up a series. I'll go visit a small town in Montana or North Dakota or around Minnesota. And then we'll invite a group of nonprofits. We'll also invite economic development officials, either from the private sector or from the state or from the county or from the local city, to see what programs they're working on. And many of them are facing the same challenges. Again, in many cases, declining populations. They're trying to make their business environment more attractive to attract either a plant that Ed talked about, a distribution center, et cetera. And so we do have some interaction, and certainly my colleagues in community outreach do, but the honest answer is we need to do more, and we need to do better, because I do think you all are playing a very important role, and you know your communities much better than we do, and so tapping into your expertise and making sure you're woven into our conversations, I think needs to be a priority for us going forward. So we're going to do more.
I would have said the opposite. We could probably benefit from you.
Okay.
So I think we're all spending extra dollars at all of those levels.
Yeah.
To do economic development. So doing it in sync with some of the things that are going on would be very helpful.
And if we see things that are working in particular communities that you may not know about, sharing those best practices, I think is a great thing that we could potentially do.
Hi. Thank you for coming today, by the way. It's very educational. My name is Clark Schroeder. My interest is in the outside traditional bank lending to impoverished areas. So we see with the internet, we see Lending Club and Stash and all these crowdsourcing lending venues. Do you see that helping impoverished areas where maybe traditional banks can't? And what kind of oversight do you carry over national lending online venues?
Yeah, so I think we are looking at the whole tech financial services arena as a potential way of reaching a lot of the individuals and communities that are underserved by traditional banking. So I'm hopeful and optimistic that they can reach some folks. The honest answer is the regulatory environment around those is still very early. I don't think any of the big regulators have figured out exactly how the Fed or the OCC or the FDIC are going to play in their supervision, or the CFPB are going to play in their supervision of that. I think we're still all trying to figure that out and watch how these new technologies evolve and emerge. And one of the things we want to do is make sure those tech providers, those new types of lenders, for example, are not ignoring the rural communities and opening their eyes that these rural communities could be great opportunities for them, that there's a real business case. This isn't charity. This isn't just good intentions. There's an actual business case to reach these folks who are underserved otherwise. So I just think it's very, very early, and it's something we're paying a lot of attention to, but we have a lot more to learn. And I'm, fingers crossed that it'll lead to better service for people who need it.
Hi, I'm the city manager in Dubuque, Iowa, and you talk about the fiscal policy versus monetary policy. There's a lot of talk in Washington, D.C. now about a $1 trillion infrastructure package, but it's in the context of $250 billion in tax credits that's going to spur private investment in public projects. And in my opinion, that's going to leave small-town America behind, because nobody's going to come to Dubuque, Iowa and build a highway because they think they're going to get toll money to pay their investment back. So what does the Fed think about this idea that somehow is going to help America help bring back our economy?
Yeah, so we look at things like that. Any fiscal package, whether it's an infrastructure plan or tax reform, we look at the national statistics on what we think on the aggregate it's going to do to the U.S. economy. So if it was a $1 trillion pure debt finance package, we would analyze that differently than if it is marshaling private sector funds. But this goes back to our challenge. Like, we don't have any ability to affect these type of distributional outcomes. And so this is literally purely a topic for members of Congress, your representatives, to engage in the debate in Congress, in the House and Senate, and with the administration to express those perspectives. I don't disagree with you. I think, toll roads can make sense, but they're going to need to be a lot of traffic, I think probably to make the business case. And yet there are other needs around the country. And so that is purely, I would say, the domain of Congress and the executive branch. But we will analyze whatever they put out as what we think it means for the aggregate economy, overall supply and demand, and what we then think it means for unemployment and interest rates.
My name is Solomon Akonki, and I'm a doctorate student in this great school. I just want to add to what Professor Norman Major talked about in regards to racial disparities. So, my dad is a PhD, he's a law professor. He had his PhD from one of the universities in London. And so I was able to enjoy high-quality education, high-quality childhood education, high-quality high school, high-quality university in Nigeria. And that set me up to be able to compete globally. I mean, it set me up to be able to work in Goldman Sachs if I wanted to. It set me up to work anywhere in the world. Nigeria has a higher unemployment rate, but all my classmates are employed. And why is that? It's because all my classmates were also children of professors. Their parents had PhDs and all that. They schooled in America and abroad. You talked about unemployment rates of African Americans being twice that of their white counterparts. So I want us to start thinking in regards to not just education, but quality of education. What is the quality of education that minorities enjoy compared to their white counterparts? What kind of schools do they attend? What kind of high schools? What is the quality of education they receive from the schools they go to? Because it's not just about this education, it's also about quality. It's not just quantitative, but it's also qualitative. And I think that's part of the challenge one of the challenges we have in the United States, because resources are not equitable. A rich family continues to enjoy riches because they continue to be able to send their children to the best of schools. And I just want us to start thinking about this, because I know as a country we've tried, but there is still so much we can do. I went to the University of St. Thomas Business School, and all of us in my cohort were immigrant African Americans. 7 of us, 4 Nigerians, 2 Ghanaians, and someone from Kenya. There was no non-immigrant African American in my cohort, none. And that's when I started thinking, I started asking myself, what is going on here? What is wrong? Something is really wrong. If immigrant African Americans are able to enjoy certain things that non-immigrant African Americans are not able to enjoy. And that takes me back to history. We have to ensure that we include historical issues in our analysis. There are certain things I don't understand because I can't say I understand because I did not experience those things. I did not experience what non-African Americans experienced. Where the country I came from, everybody was the same, you know. We didn't have any discrimination. We don't even know what that means. And that's why when we come to a country like this, the greatest country in the world, we don't feel intimidated. We don't feel inferior. We feel like everybody else. So there is something we have to do because there's a problem. There's a problem, historical problem that we still need to deal with. Thank you.
So I agree 100% that, especially when you look at the quality of education, to me, education must be the great equalizer in our society. It's the one tool that can break the cycle of poverty that just gets passed on from generation to generation. And if you break that cycle with education, it's not just that individual who's helped. It's their kids and their grandkids and their great-grandkids, and a whole path, a whole line is changed. So I agree with you 100%. I gave a speech the other day where I've given a few speeches on education. If you just look at, we've got data on the Minneapolis public schools, and if you plot all the schools on a chart, and you have one axis is how diverse the population is, meaning non-white, and you look at then on the other axis how experienced the teachers are. The more diverse the school, the less experienced the teachers. Full stop. And so why is it that arguably the kids in Minneapolis who need the best teachers are getting the least experienced teachers? And I'll also say this, some of you aren't going to like this, but I actually think that school choice, my parents, we weren't rich, but we were fine, middle class. I went to public school through 8th grade, and then my parents chose to send me to private school for high school. The fact of the matter is, middle class and rich kids in America today have choices. They either send their kids to private school or they move to a better district to make sure their kids get access to good schools. Low-income Americans do not have that choice. That to me is unfair and part of the problem. And so I agree with you 100%, and I'm glad you feel empowered based on your experience to come here and not feel any barriers. And I'm with you, because I feel that way, and I want everyone to feel that way. I want to do a time check. I'm fine. One or two more questions.
All right, let's get one more question.
Hi, I'm Mary. I'm in the master's program under Dr. Waldron here. Yesterday there was an article published about Minnesota losing our Fortune 500 companies, and I'm wondering what sort of conversations you guys are having, as we already have, difficulty in unemployment, how that's going to further affect it. Thank you.
I haven't seen the statistics. I saw the headline that you're talking about, and I haven't had time to dig into it. I think that Minnesota is, look, I don't want to lose Fortune 500 companies, but we are blessed that we have a lot of very good companies here. And not only do we have a lot of very good companies here, generally speaking, those companies take real interest in the community. More so, I've lived all over the country in many places. I haven't seen this before, where you have such a concentrated business community, but such a civically engaged business community. And so it's a real source of strength. And so I need to look at what the root causes are to understand that. Overall, what will keep businesses growing here and coming here are things like an educated workforce, the availability of talent, overall infrastructure, quality of life, et cetera. I think we have a lot going for us here, and I'm optimistic about the future of Minnesota, the Minnesota business climate, but I don't have specific answers on the article that you're talking about, but I'm going to look at it.
Well, gentlemen, thank you very much. What a great start to the conference. Let's give them a hand.
Thank you very much. Appreciate it.